Hey, this is Kyle at Projection Hub, and today I'm going to be talking about how to get an SBA loan for an acquisition. Now, obviously, acquisitions can look a lot of different ways, a lot of different industries, different shapes and size. And so maybe you have gone down the SBA rabbit hole and are a little bit confused on where to start. And that's perfectly understandable because, for startups, it can be a little bit more clear. In existing business, it can be a little bit more clear, but acquisitions kind of play in this gray space between the two as far as what type of lenders can you work with, who should you talk to, where can you find the lenders, what documents are you going to need, what is the process going to look like at these different lenders. And those are all very viable questions, and I'm going to try to answer as many of those for you as possible today. As I mentioned, my name is Kyle, and before my time with Projection Hub, I was an SBA loan officer for about 7 years. And so in my time doing that looked like working with different startups and existing small businesses to review their business plans, put together their applications, review their projections, review their financial statements, all of the things that they need to in order to get an SBA loan package, and then kind of walk them through that application process. And so got the chance to work with hundreds, if not thousands of businesses during that process, and even some acquisitions during that time. Now, those SBA loans I was working on were a little bit smaller, so it wasn't super common for an acquisition loan. But in my time with Projection Hub, we've helped more than 50,000 different small businesses create the financial projections for their business plans, their loan applications, their pitch decks, and in many cases for acquisitions. That's probably one of the most common businesses we get to work with, is someone looking to acquire another business, and especially if they're doing part of that with an SBA loan. And so using that experience from my time as an SBA lender and my time with Projection Hub, I'm going to be talking about that today on what you can expect when you're looking for an SBA loan for your acquisition, and a lot of the different details involved with that. So I should mention, in addition to myself, our founder and owner, Adam Hoeksma, was an executive director of an SBA lender for over a decade, has a ton of SBA lending experience, and he works directly with a lot of our clients on their acquisitions and helping them through that process. And so learned a lot from him, and we'll talk about some of the things that he brings to the table in this process too. So if at any point you like this video, you find it helpful, give it a thumbs up. That's super helpful for us as a fellow small business. And if you have questions, don't hesitate to comment down the video below. If you're comfortable doing that, we're very responsive down there. If you'd like to engage with us directly, you can just contact us at support@projectionhub.com. We're happy to answer any questions you have about your acquisition journey or your SBA journey. And I'll, through today's video, I'll talk about some of the different ways that we can help, both free and not free. And so I promise you today there will be a lot of value without spending a single dollar. I've got a lot of great things for you today. So without further ado, let's go ahead and jump into how to get an SBA loan for an acquisition. All right, I should have mentioned in the introduction if I didn't, but today we're going to be using this free SBA loan application checklist as our guide. And so this contains a lot of helpful information. We've put this together, and you can see how it's separated into some sections. So we've got the types of, kind of common SBA loans, and I'll talk about those today and which ones are most suited for an acquisition. Some tips on how to find an SBA lender and some resources to do that. And you can see in here, we've got all these links. Those are links to more details about those specific programs. Those are links to tools, to free tools. I think we tried to point out if it was free or not free, but the vast majority of these are free. So you can see here's a YouTube logo. That's going to go to a video about how to find an SBA lender. We do offer a totally free SBA loan review. And, if I click on this, it's going to take you to a YouTube video. So there's our owner and founder, Adam. He talks about that free SBA loan review. And if I open up one more page, you can see here on our website where you can learn more about that. But it is truly, totally free. That will essentially, you'll provide some more information voluntarily, and we can help, basically figure out what point in the SBA process you're stuck at, give you some pointers, recommend some lenders, that kind of thing. So you can check that out. But yeah, we've got details on a typical process, the documents you're going to need for your acquisition, some additional expectations. I'm going to talk about all those today. So it might be a little bit longer video. So if you'd like to, I would encourage you to watch the whole thing through. But if you'd like to check out the description below, you can see the timestamps and jump to some different sections if there's some things you're particularly interested in learning about. But we're going to go through this kind of top to bottom. I encourage you to grab your own copy of the SBA loan application checklist down in the description below, so you can click all these links and watch all these videos and do all the things at your own pace if you'd like to. So let's go ahead and start out with the types of SBA loans. All right, so The different types of SBA loans, we've got three primarily listed here. We've got microlenders, 7A lenders, and 504 lenders. And this will actually be quite straightforward for an acquisition because one of these doesn't make sense at all. One of them might make sense if it's a small loan, and then one of them is by far the most common for an acquisition. So let's start at the bottom. 504 loans are, to my knowledge, and to be totally clear, my experience, my tenure at an SBA lender, we were providing microloans primarily and then 7A loans. And so my primary knowledge is in those two programs with familiarity of 504 lenders just through partners and being kind of in the space. But 504 loans are probably the least common and I don't think are optimal for an acquisition. These are going to be ideal for, purchasing land, buildings, large pieces of equipment. They're typically long-term, lower cost fixed rate loans for big projects like that, not really for the transfer of a business or acquisition of a business. Now, a microloan is exactly what it sounds like because they're small. They're typically less than $50,000. But microloans can technically be used for acquisitions. And when I was an SBA lender, a microloan was actually used in some cases for an acquisition. They were very small acquisitions, but it is doable. It's possible. So I guess this depends on the size of the business you're trying to purchase. Another way you might be able to use a microloan for that is, let's say you have some cash that you're going to contribute towards the acquisition, or even maybe the sellers agreed to some form of a seller's note. So let's even say they're selling their business to you for $200,000. And maybe that could be made up of a $50,000 microloan, $50,000 of your own money, and a $100,000 seller's note gets you to that $200,000 acquisition price. That is something that's doable. So if you haven't thought about that option before, and you are pursuing acquiring a business that's, on the smaller side, certainly look into microloans. I'm not going to talk about a ton in this video because I think that's a pretty specific use case, but I will open it up for you here. Microlenders are very cool, and the reason I think that it's worth it to seek them out is because some microlenders are also 7A lenders, and we'll get into the 7A program here in a little bit. But again, these are small loans. You can learn a little bit more about the mechanics of an SBA microloan. They are slightly different than how the other ones work, and the lenders themselves are typically different. But a lot of times they're nonprofits, they're community organizations, so they're not typically banks that are providing those. And so they're typically mission lenders. They usually serve cities or a few counties or a state, like the microlender I worked with served the state of Indiana. And so they're really cool programs, and I certainly think they're worth looking into if you're exploring loans on the smaller side. But most likely you're going to be looking for, something that's probably going to be in the multiple few $100,000 all the way up to a few $1 million worth for your acquisition if you're considering an SBA loan, and that's going to be the 7A. The 7A loan is the most common SBA loan, primarily because that's what a bank would usually use if they're participating in an SBA loan. So you may already know this, you may not, but banks can obviously offer conventional loans, traditional loans, where they are lending out deposits or basically from their own balance sheet, and they're charging a spread on that, and that's what they're earning. But the banks can participate in an SBA program, and so I guess a common misconception that people have about the SBA is that they think you're going to the SBA and getting a loan from the federal government, and that's not really how it works. More so, the programs that the SBA supports work in, like, they are providing some like loan loss and insurance. Basically, they're mitigating the lender's risk. So they might be telling the bank, like, hey, you may not normally make that loan, but we will guarantee up to a percentage of the losses. If it falls within a certain range, we want you to go ahead and try to make that loan. And, they'll use federal taxpayer money to help back up that loan. So they're not just making loans to anybody, but that's kind of the purpose of the SBA loan, is to encourage lenders like banks to make some loans maybe that they wouldn't have normally if they're using their own kind of guide rails on that. So don't take that as they're making loans to everybody, because they're not. It's still going to be difficult in some cases, especially a bank 7A program. But 7A is typically what's going to be used. Loans up to $5 million. The lender I worked for, our 7A program went up to $350,000. And so we did finance several acquisitions in that space, full acquisitions or sometimes even partial. And then there were seller notes paired together. But It's a really great product. Many different lenders participate in it. Banks participate in it. Nonprofits can participate in it. There's a lot of different options. We'll talk about that more when we're talking about finding an SBA lender. So long story short, you're probably going to be looking into a 7A loan. And if you are already planning to just be talking to banks, you're already there. You're already looking at a 7A loan because the bank is not going to be probably pushing you towards a 504 or microloan. So that's just a quick lesson on the SBA loans. You can learn more about the SBA website there if you have questions. Now let's go ahead and kind of jump straight into finding an SBA lender. Now this section is kind of the main reason probably most people are looking for videos like this. And so I'm not going to withhold it to you from the end of the video. I'm just going to talk about it now, but we will get into more of like the process and the documents and some things after that. So I encourage you to stick around. You can see a video here to get some more information on exactly how to find an SBA lender if that's what you're interested in. Grab your SBA loan checklist. But as I mentioned, we're probably not going to be looking at a 504 lender, and we're probably not going to be looking at a micro lender, but these resources are here. I'll show you the CDFI list here just in case, just because it's got some different options. And again, I won't bore you with the details of the difference between an SBA microlender and a CDFI. CDFI just stands for Community Development Financial Institution. So some CDFIs are also SBA microlenders. Sometimes they're separate. The lender I worked at was a CDFI. It was an SBA microlender. It was a 7A lender. There's a lot of overlap in the industry. And bank 7A lenders are kind of the one standalone that's pretty regulated. They do their own thing. It's pretty common from bank to bank. You're going to get a similar experience versus these other ones. And this organization called Opportunity Finance Network, which is basically a network of these CDFIs, has this nice little filtering tool. So if you can say, if we're looking for a different type of org, and maybe we're looking for a non-bank, we can go to loan fund. You could find your state. You could find, what type of lending. So if a business or maybe micro enterprise, let's just do a business, and we can see some options here. Actually, let's do micro enterprise. Oops, that was the wrong button. Let's do Indiana, micro enterprise, and filter. So first thing off the bat, you'll notice is I said Indiana, and some of these are non-Indiana related. And that's just like you would expect kind of with the banking industry. Some of the lenders have gotten big enough that they're multi-state. They might even be national at some point. So like Axion is a big lender it's a big alternative lender in this space. The lender I worked for is right here, Bankable. So this is a cool tool because you can go, if you go this route, I would encourage you to really only maybe explore the ones that are dedicated to your state initially, just because they might be familiar with your community or what you're trying to do or where you're trying to acquire a business. You can open these, get a little bit more information. It might even tell you what size of loan they do, but you can check out their website. This is the lender that I worked with. You can see their loan programs, who they're making loans to. So it's a blessing and a curse, these micro lenders and these CDFIs, because it's a curse because you got to do more research. They are highly specific. They serve smaller locations. But the upside of them is that they typically have higher approval rates. It's going to be a much more hands-on experience. They're going to be very friendly and kind. It's going to be a little less rigorous. They might even have a specialized lending program to the type of acquisition you're doing. So there's some value there. It just takes a little bit longer to extract it. So again, we're not going to talk about 504 in this video, but let's talk about 7A. We've got two options here. And I've put, if you want to find the lenders or if you want the lenders to find you. And just a word of caution here, because I know most people would typically say, hey, I want them to find me. That's way less work. And so let's start with that option. Now, this is a tool the SBA provides. And essentially what this does is it allows you to put in your information of, the loan request you're seeking, essentially. And then it's going to blast that out to all of these different participating lenders that can choose to opt in to contact you or to receive that information and approach you about your loan. And that might sound awesome because it feels scattershot. It feels like, maybe a little less work. But speaking from the experience of a lender who did participate in this program and received these, one thing that lenders, especially bank lenders, really love is leads. They love applications. They love the chance to make a loan. And I'm not saying that's a bad thing, but they may not always have the intentions to make the loan, or maybe they're not the perfect type of lender for your acquisition or your type of industry. And so you might end up actually working extra because you've got all these people asking you for documents and all these things, but they may not, always work out in the end. And so it kind of feels, don't choose this route if it feels like it's less work. But if you like the idea of just having a bunch more options and getting those conversations started at once, there's certainly no harm in doing this. But yeah, you put in your information, it blasts out to lenders that have kind of matching parameters, and then they can opt in and talk with you. Whereas this other one, if you want to find the lenders, and this is a tool that we put together. And so you can come to this link, you can get access to this. You can see a little video how it works here too. But you can, right now it's for free at the time of recording this. Don't come after me if it's not free by the time you go look at it. But this is what the tool is. And essentially we have taken a massive amount of publicly available SBA lending data, and we got it all prettied up and organized. And we've created this nice filterable tool where you can essentially find and see which lenders, which 7A lenders. So this is a 7A product, like these are 7A data. Which 7A lenders are making the most loans to specific types of industries, to specific type of business stages in specific states. And so what this might be valuable in is, you might say like, I want to find out who's actually making loans to the type of business I'm trying to acquire. And so let's go, maybe you're in California, and let's say you want to acquire a brewery, and we're going to do this change of ownership. So you can see the list is filtering, right? So like right now we can see Live Oak is at the top, CDC, Summit Bank, and let's go to change of ownership and let's see how this changes. So now we can see the list gets a lot thinner, right? But still we've got Live Oak Bank at the top. And so this is a nice way to just get a short list of like, what lender should I talk to? Because they actually, even though it might seem like not a ton of action, that nobody else is doing that type of loan. And so they've got some experience there. And obviously, depending upon type of industry in the state and that kind of stuff, like the amount of data will fluctuate in those. But this is a really great tool to be able to do that. And in a lot of these cases, for many of these different lenders, we actually have contacts or connections to these different lenders. And so if you give this tool a try, and especially if you do that free SBA loan review, we can do this with you. And if we have a contact at one of these lenders, we can make direct introductions to them for you. So certainly open that up to you. But this is a nice little tool where you can kind of take the control of who do I want to talk to, who's making loans to my type of acquisition. And that's certainly a valuable resource. So you can grab access to that. And this little video can give you some more tips and tricks to do that too. And if I should point out, if at any point you got any questions, you can contact us at support@projectionhub.com as well. But let's go ahead and get into what is the typical SBA loan process. Now, here we have some just initial general steps that I'll talk about, and then we'll get into some specific documents for an acquisition. So first, because we're talking about 7A, which means the most common type of 7A lender is going to be a bank, your experience is going to be probably pretty similar at most lenders. Now, if you were a startup and I was talking about like a micro lender and that kind of stuff, my advice would be, or my warning would be like, it might be a very different experience depending upon what type of lender you go to. 7A is going to be pretty standardized. It's going to be pretty, I don't want to say regulated, but it's going to be standardized because banks are very standardized experiences. But most lenders are going to have their own intake application. That might be on their website. You might have to go into a branch. You might have to contact them directly, but a website is normally where I would start with them. We can help make an introduction to a lender specifically at a different lender if there's one that you'd like to talk to. But they're going to have an intake application, and they're going to just collect general information about you, about your plan. Hopefully, after you submit that initial intake application, you have a conversation with a loan officer, with a business lending officer, a commercial lending officer. If you do not have a conversation with the loan officer after you submit your information, I would have concerns. I would want to talk to someone about this type of transaction. That'll give you the chance to ask questions about expectations, specific documentations, their current rates, their turnaround time. Do they have lending preferences right now? That's just a dialogue there that's really valuable for something that's like a big decision like an acquisition. And so I would want to talk to a loan officer. And if they don't do that, that would be a little concerning for me. So then they're going to want to collect a bunch of documentation. Again, we'll get into those documents a little bit, but they're going to have a laundry list of things that they'd like from you. I'll try to help you get those prepared in advance based upon some of these recommendations. But let's assume they've collected all the things that they need initially to get into underwriting. So they're going to package all that up. They're going to kick it over into underwriting. Depending upon the size of the bank, underwriting might happen locally. It might go out to like a central location in a different state. Anyways, it's all going to be done digitally, so it should happen relatively fast. But I would ask for them for expectations on how long underwriting process will take. And they're essentially just going to go through your deal with a magnifying glass, and they're going to try to poke a bunch of holes in it. They're going to try to find all the concerning things and ask questions about those concerning things. And so there should be a good amount of back and forth during the underwriting process. You know, if you just hear nothing and all of a sudden you hear a decision out of the blue, you could always ask them, like, what were the concerns underwriting had? But I would suspect you're going to hear some back and forth with your loan officer to ask some questions for clarifications on the deal, especially with an acquisition. You know, some of the documentation you're going to provide being like, you know, the purchase agreement, letter of intent, all these different things, the seller's financial statements. There's going to be questions because there's going to be details about the documentation you have from the seller that you won't be able to answer some of those questions. And so the underwriting process for an SBA loan for an acquisition should actually be a helpful process, because if you haven't already done some due diligence, that will be kind of another layer of due diligence that will be helpful. But I would encourage you to do due diligence, and we'll talk about that later. All right, so let's assume they've got their underwriting, they've answered all their questions. Once they get through that, there's going to be some sort of review, like committee review or decision made. Now, this process will change depending upon the loan amount. It'll change depending upon the size of the lender. When it comes to the SBA, in 7A, SBA has some lenders have what's called delegated authority. I think this used to be called a preferred lender status. Basically something the lender could qualify for, and the SBA would grant them this power to make the approval decision themselves. So the SBA would say, okay, you're as a SBA participating lender, you're in good standing with us. We grant you the authority to make the final decision, move forward with the loan if you'd like to. So it speeds up the process quite a bit. There are some lenders, even if they have that authority, they choose not to always exercise it, and which that would mean they're going to package everything up and they're going to send it out to the SBA, and the SBA is going to do another review to basically confirm their decision or push back on it. And the reason why a lender might do this is because they're trying to protect what's called their guarantee. So guarantee is what I was talking about earlier. If the loan goes bad and the loan defaults, this lender, the bank, is going to go to the SBA and say, hey, pay up. You told us you would back us up on this loan if we made it. And if it went through the SBA and the SBA signed off on it, it's a lot easier for them to win that guarantee than if they hadn't. So that's a little bit of inside baseball. But if they use the delegated authority, it'll go through that review process pretty quick. They'll make their decision. They'll come back to you. If they do not use their delegated authority, it'll take a little bit longer because it's got to get packaged and go out to the SBA or one of their offices somewhere in the country. After that decision is made, there will be kind of another round of SBA paperwork. So there's going to be additional SBA forms that the lender's going to have, you're going to have to fill out. These are forms you can't really prepare in advance for. You're just going to have to wait and fill them out to when you get to that point with the lender. They change often. They have different ones that different lenders are going to use, so it's not really a thing you can prepare for. But once they're done with all that paperwork, should be a closing and you should get your funds pretty quickly. Now, let's talk a little bit about documents. We're not going to go into the startup documents. We're not going to go into the existing documents. Acquisition is kind of the combination of both of those. You know, most lenders are going to want to see documents that typically a startup and an existing business would need. Plus, there's some things you don't really know the answers to, maybe because it's an acquisition. So there's going to be a lot of documentation for acquisition. So again, they're going to have the application, which every lender is going to have their own. A personal financial statement will always be an early document. Each lender is going to probably have their own. This link right here goes to the SBA's like kind of generic personal financial statement. I would recommend, if you haven't filled one of these out recently, grab this copy, fill it out on your own just as an exercise. just because sometimes there's things you forget about that are part of your personal financial picture. And so having that practice will make it easier to kind of copy and paste that if the lender asks you to fill out a new one. So if you haven't done that in a few years or recently, I would just fill one out for some practice. Personal tax returns, 2 to 3 years. So get with your tax accountant. If you're your own tax accountant, or find those documents, get those handy, get them in an easy transferable format if it's a massive file size. So locate those. And then you're going to need a business plan. So most existing businesses don't usually need one unless they're doing an expansion. For an acquisition, you're going to have a business plan. And that business plan is going to contain financial projections, even though that's a separate document. You're going to have financial projections as well. So this link right here, we do have a list on our website of a bunch of free business plan templates for different industries and for some acquisitions. You can grab a copy if you'd like. However, we also offer a business plan writing service where you would work with yours truly, where I would help you write a full business plan. That you can check that on the website here. This goes directly to our website. You can learn more. Sorry, this goes to the free business. I think I must have clicked the wrong one, but we do have a writing service, and yeah, that will go to that. So you can check that out on our website or ask us for questions about it at support@projectionhub.com. And then the big one is going to be the financial projections. This link right here goes to a video that basically shows you how to create financial projections for an acquisition. So you can check that out. That is going to it's basically a video demonstration of how to create this, to fill out this acquisition projection template. So if you're interested in creating your projections on your own, you can fill this out. It's very simple. You just edit the blue boxes on these blue tabs. You'll fill out some information and it'll generate all of the financial statements that you're going to need for you, including if you need to plan out distributions and resale of the business and all that good stuff. But just like the business plan, we can also just take care of your projections for you. You can check that out here in this Need Help in Creating Projections. You click on that and you can learn more about our service to create your projections for you. So those are just some quick shameless plugs, but you're going to need a business plan. You're going to need financial projections. We're here to help if you have any questions about that. In addition, you're going to need from the seller 2 to 3 years of business tax returns, at least a year to date of profit and loss or income statement, a year to date balance sheet. If you can get multiple years of financial statements, your lender's probably going to want to see that. Even up to maybe 2 or 3 years would be helpful. The larger the loan amount or the acquisition price, the more financial statements they're probably going to want to see and expect to have handy. A credit release form, you're not going to be able to prepare that in advance. Your lender's just going to have one. You'll probably put your social security number and signature and you'll be good to go on that. Government issued ID, a resume. You will need a resume. I don't want to say this wrong. I want to say it's for any key employee, manager, owners. So whoever the lender might deem as a significant employee or who will be significant to the business, they're probably going to want a resume. That includes maybe your team coming in, but also some of the employees you would hope that will stick around. Purchase agreement, additional SBA forms that we mentioned. And lastly, do you need to do financial due diligence? Some people would call that like a quality of earnings report. If you haven't done that, or so if it's a fairly large acquisition, you probably will be doing quality of earnings. But you can also check this out if you want to do it on the small side. There's a way we can help do some due diligence on the lower cost side of that. It's not a full-blown quality of earnings report, but here's a video on how to do some pointers that you can do some, what we call quality of earnings sniff test, which is a pretty handy thing. So those are some of the documents you're going to have probably no matter what in an acquisition. Now over here are some additional documents and expectations. These are going to differ depending upon the type of acquisition, the size of the acquisition. So, if there's any sort of leases involved, they're going to want lease agreements, proof of insurance. Sometimes they'll want that in place, but sometimes it's not possible for that to be in place prior to the acquisition happening. So that might be within X amount of days after closing. Any vehicle titles, so vehicles being used as collateral, they'll need to get those collected eventually. So I won't go through all of these. These are just going to be scenario specific, right? Like contracts is one. If the business you're acquiring has some significant contracts that, greatly impact the ability of the business, then the lender's probably going to want to see those contracts. to make sure that they are in place or that they're planning to continue. So yeah, you can reference this list, but those are just going to be some other things that are going to be case by case depending upon your type of acquisition. Some supporting documentation. If there's any lawsuits going on, whether with you personally or maybe the business you're acquiring that you want to, if there's been a judgment on those things, a settlement on those things, just making sure you have the paperwork arranged for those. This is a good time to mention, the SBA does have some eligibility requirements. So maybe I should have mentioned these all the way at the beginning of the video. They're not super common. So, it's likely that you're not going to have issues with that. But if any of these resonate with you, then I would encourage you to look up more information about them and see, or you can reach out to us and ask if you'd like to, but you can probably find resources on those. But some typical things that would disqualify you from an SBA loan. One could be your criminal record. And so that's going to depend on the crime, the severity of the crime, the recency of the crime. And so just because you have a criminal record, that doesn't necessarily make you ineligible for an SBA loan. There are certain types of charges that would disqualify you, like check fraud or like a financial fraud or something like that, that you're not going to be able to get an SBA loan if you have that type of thing on your record. So again, if that resonates with you, you can look into it further, but you can check into that. If you've ever defaulted on a government loan before, I think that would include like student loans. There's all types of different federal loans, but if you've ever defaulted on one of them before, that would exclude you from being able to get an SBA loan. Bankruptcies, more like recent bankruptcies. So like if you've had a bankruptcy within the last, like 3 years, I'm pretty sure that would disqualify you from getting an SBA loan. And even if it's been, 5-6 years, your lender's probably gonna have some concerns about it, but they're able to talk to you about it. You can go through those details and whatnot. So those are really gonna be the only main hard stops. There are some businesses that are ineligible. I can open up this list, but a lot of them are not super common. And we won't read through all these businesses, but you can check these out. But like, you're not going to acquire a nonprofit, obviously. You can't acquire a lender. What's called a sin business, a lot of times are not going to be eligible. Pyramid scheme. Probably the most common issue for ineligibility for business-wise is going to be, besides the nonprofit one, is probably going to be speculative businesses, just because that's a little up for interpretation. When I was a lender, one we would run into often would be people trying to do like house flipping. They wanted money to flip properties or real estate, but that would be considered speculative. So an acquisition, that's probably not as common that you're going to run into that type of issue, but you can give a scan to this list to make sure that you're in the clear on that. There's a lot of information out on the internet just about SBA eligibility, so I would encourage you to check into that. Okay, so those are some different documentation. Now, let's start to talk a little bit about expectations. And I've also got some recommendations based upon like things that might be able to help some approval chances. And we'll talk about those a little bit at the very end when we wrap up. So some expectations, personal guarantee. You will be required to personally guarantee the loan. When I was a lender, all the time we would hear people say that they wanted the loan to be in the business's name, but not in their name personally. And that sounds great, but that's just not an option, especially when it comes to an SBA loan. Any owner of 20% or more will be asked to personally guarantee the loan. It will be required. I shouldn't say asked. You will be required to guarantee the loan personally. So if the business can't make the payments, you will be on the hook personally. And you do not want to default on an SBA loan, per my earlier point about defaulting on a government backed loan. Collateral will be expected. Now, part of the benefit of the SBA is that, and part of the purpose of the SBA is to help on those loans where there's a collateral shortfall. So as I was talking about earlier, banks that participate in this program, having an SBA program gives them a route that if there's a loan that maybe doesn't meet their conventional standards, it might meet the SBA standards because they can be more flexible on collateral shortfalls and that kind of thing. Does not mean a guarantee, and it does not mean non-collateralized or uncollateralized. The SBA lender is going to be expected to get as much collateral as they can up to, the amount of the loan. And so just be expecting that. Obviously, they're going to start with business collateral. So if the business you're acquiring has a lot of assets or fixed assets in it, that's really helpful. Assuming it doesn't have enough fixed assets to, secure that loan, they're going to be asking for personal collateral. So that might be, a second mortgage on a house. That might be a different piece of real estate. That could be free and clear vehicles. So just be prepared for that conversation. I'm not telling you what to do or what you need to pledge, but just be prepared for that. An owner cash investment of, typically 10%, but up to 20% of the loan request. So if you're trying to acquire a business for $1 million, you're going to need to have probably at least 10% of that contributed towards the acquisition, and you can't finance 100% of that typically. Your SBA lender is going to be looking at a debt service coverage ratio. That's what DSCR means. That's a moving target, and your lender might have their own number that they like to target. And you can look up more details about how to calculate debt service coverage ratio, but it's really just a check that based upon how the business you're trying to acquire is performing, they're going to assume that performance of the business. But then when you add on top of that, the loan repayment for the acquisition, does the business still cash flow? So that's really what that check is doing, is they're going to make sure that the cost to acquire that business isn't going to make the business no longer make sense, and that you won't be able to make your loan payments. So that's really what that is. And we've already talked about the businesses that are ineligible. Okay, so that's at least what we see here on the paper and checklist. Go ahead and, again, grab your own copy of the SBA loan application checklist. Watch this video and do the free SBA loan review. I promise you, it's free. It's great value. We'll provide some recommendations and some options and things that basically just are catered to you wherever you're at in the SBA loan process, especially if that's related to acquisitions. And then I'll leave you with some final recommendations. And I'm going to read these off the side here. So I'm looking at you, but they're kind of over here. And so first recommendation is going to be prepared. Probably pretty cliche and obvious, but just have as much of this documentation we talked about ready to go as possible, especially the big ones. Okay, so obviously all the stuff from the seller, anything you can get your hands on with the seller, bundle that up, get the tax returns, financial statements, resumes from key employees, all that kind of stuff. Get that all together as fast as you can. And then the big ones are going to be your personal information. So, personal tax returns, your business plan, your projections. Just start working on those and have those ready to go. That's not going to be every document you need, but it's going to be it's going to be a big chunk of them and some of the hardest ones to produce. And then obviously some of these additional ones over here, but just collect as much as you can. It's okay to contact a lender before you have any of the documentation, as long as your expectations are things aren't going to move quickly. They will wait on you, but they're not going to necessarily be waiting hand and foot for you, right? So if it takes you a couple weeks to get all your things together, don't expect for them to move at the speed of light as soon as you have all those items. Just be prepared as you can. That's the whole purpose of using this checklist. Have the right expectations. We already talked about that a little bit about personal guaranteeing, collateral, all that kind of stuff. So just have good expectations. Again, I just mentioned the SBA loan process, especially 7A, is not particularly fast. I would expect conservatively probably 1 to 3 months in this process, maybe longer, maybe faster. Depends on how prepared you are. Depends on how quickly you have to move. There's many different factors, but just in general, this is not going to be a couple day thing. It's going to be a long process. So just have those right expectations. I should also mention, along with the expectations, is you can expect a lot from your lender. You can expect them to try and move fast. You can expect them to be responsive if you are meeting all of their requests. If you're getting things to them on time, if you're getting things to them quickly, if you're answering their questions quickly, then you have all of the reason in the world to ask for updates, ask for estimates, all those kinds of things. If you're not meeting their requests, then don't have expectations from them to do that. So just to put that bluntly. A big one here, find the right lender for you, not necessarily where your loan broker wants you to go or your hometown bank. Now, if your hometown bank is excited about, approving a loan or giving a loan for your acquisition, then that certainly can be a good option. I more so just state that one because a lot of people seem to think just because they have a long relationship with the bank means that they should be guaranteed to get a loan from that. And that's just not really how it works, especially in these business loans, especially for acquisitions. Different lenders just have different preferences and expertise. And so using a tool like I showed you earlier, like to find which lenders are doing what types of loans in which states, that's a really good way to hone in on the types of lenders that are, more aligned with what you're looking for. And loan brokers can be great. Don't get me wrong. They can be very helpful in preparing documentation. They can be really helpful getting in the room with lenders, but they have something to get from it. They are getting a fee from that essentially. And so you just want to make sure that whoever they're recommending still has a good rate structure for you, a fee structure, all that kind of stuff. So it could be very good recommendations from a broker. I'm certainly not trying to slander them at all. I'm just saying that they have an incentive to do that. So just make sure you're aware of the type of loan you're getting with their recommended lender versus where you could get for other lenders that might be better suited to you. Share the dirty details because they will come out eventually. So save yourself the time. So things like a criminal history, reasons for a poor credit score, confusing financial line items on your projections, or if you are aware of things being hidden on the seller financials, just share things sooner rather than later. Because if a loan gets approved under any sort of false pretenses or misunderstanding, that's grounds for the loan to be called due. So you certainly want to avoid that. So just share all of it up front and be as accommodating as possible. Accurate financials and realistic projections. So you'll have, the seller hopefully has accurate financials. So do your homework and poking holes in those and analyzing those. This video right here goes into, how you can review some financial statements and some ways we could even help you do that to make sure something's a good deal. So you want to do that on the seller's side as much as you can, but for your own side on the projections, make sure when you produce those projections, they are based in reality, industry averages. So do some benchmarking. Again, those are things we can help with too, but that's just a recommendation to you. Strengthen your application as much as possible. We already talked about the collateral component. Another one I like to recommend to people sometimes is think about who could potentially be a good cosigner if that's something that you would need, and line them up in advance just in the case you might need them, because that could slow down the process if the lender says they're interested in moving forward but would feel more comfortable with the cosigner. Then you got to go track that person down. So just be thinking in advance, like if you needed to ask someone to be a cosigner, who's someone who has strong income and a strong credit score and would be willing to potentially do that for you, and maybe consider having a preliminary conversation with them if that's something they would consider doing. And very last one, make sure that you as the owner and your leadership team has ample and relevant experience. So you want to make sure that your lender believes that you know what you're doing, you know what you're getting yourself into. You should be able to demonstrate that in the business plan. We have other videos that talk about how to do that in the business plan, but just making sure you highlight what your relevant and transferable skill set is, your experience that you have. And if you alone don't have the experience to fully know what you're getting yourself into, make sure you surround yourself with people that do. So that's partners, key managers, key employees, key advisors, a board, that kind of stuff, just to make sure that you are well-rounded and ready to go. And those are all ways to help get an SBA loan for an acquisition. We've got lots of other resources related to acquisitions, whether that's finding funding or preparing projections for them or documentation for them. So please don't hesitate to explore other videos or reach out to us at support@projectionhub.com. We love working with acquisitions. It's one of our favorite types of clients to work with because we've got a lot of experience and a lot of good things there. So hopefully you enjoyed this video. If you liked it, give it a thumbs up. That's super helpful for us. Leave a comment down below if you've got questions, or reach out to us directly. And consider subscribing to the channel if you want to see some more content from us. And hopefully we see you in the next video and get to talk to you soon. But best of luck on your acquisition and getting funding for it. We'll see you on the next one. Thanks.